Hello my friends, this is Doug Fabian. Welcome to my weekly ETF report. Thank you for joining me today, Thursday, February 5th, 2015. Well, we already have 1 year in the books and we have a lot to talk about today. As always, 3 ideas I want to bring forward to you. Let's begin with where the financial markets stand on a year-to-date basis. Just looking at the basic numbers, I looked at the S&P 500 as I came into the studio today, and on a year-to-date basis, it's just above the zero line. We'll call it break even so far this year. But the international markets, up 3 to 4% on a year-to-date basis. Now let's take a look at some pictures. Here I have a chart of VTI. This is the Vanguard Total U.S. Stock Market ETF. All stocks in the United States in one single exchange traded fund. As you can see, we have been trading sideways for a couple of months, but we're starting to try and break out to the upside once again. We're coming upon the end of earnings season, and we need to kind of see this price trend extend in order to get a new uptrend in place. So we'll just say that the U.S. stock market's somewhat benign right now. But as I have been advising you all year long, I believe that the best opportunities for stock investors are overseas this year. That doesn't mean you abandon your U.S. stocks, but it just means that you start to make some adjustments towards international. The second chart that I have for you is also a Vanguard ETF. This is VT. Vanguard VT represents all stocks in the world in one single exchange traded fund. This includes the US. You'll notice that VT has been trading sideways for about 6 months. It had a big October swoon. It's worked its way back. And as I mentioned, as we begin this year, international stocks are outperforming US stocks. So as you're looking for ETF ideas, I would encourage you to look internationally. Second, I wanted to talk more about the Inside ETF conference that I attended a week or so ago, give you some more insights from that conference. And I think one of the biggest surprises was the fact that Vanguard, again, Vanguard is a big mutual fund and ETF manager. They came out with a message of caution for investment advisors, telling advisors to communicate to their clients, expect lower returns going forward. And this is because the amount of allocation today that U.S. investors have to the stock market is at the same lofty level it was in 2007 and in 2000. So they're saying, hey, look, markets are expensive, markets are extended, and you need to be prepared for some underperformance. And that's kind of a refreshing message, I think, for many investors relative to the markets. I invest differently than Vanguard does, but still I think it's a realistic message, and I wanted to share that with you. Also, one of the other big surprises from the ETF conference is that exchange-traded funds are continuing to lower their fees. They're already the lowest investment vehicle available, but many shops, in order to gain market share, are lowering their fees further. That's a good thing. Third item to bring to you, I wanted to talk about mutual funds and ETFs and the use of stop losses. I had an email from a newsletter subscriber who asked me about setting stops with mutual funds. And I do have a mutual fund recommended in our income portfolios, and I have what I call a mental stop on that mutual fund. What's a mental stop? Well, you cannot place a market order to sell a mutual fund with your stockbroker. You can set a market order or a stop order for an ETF, but you can't do so with a mutual fund. So this subscriber was asking me for an alternative to that particular mutual fund I was recommending, and she wanted to invest in an ETF where she could set a stop loss. Now, I want to just mention that stop losses are not going to save your portfolio. You have to realize that stop losses are just tools. The most important habit you need to get into with your investment portfolio, and I learned this from my dad, some 30 years ago, is you must monitor. Monitoring, you think like, oh my gosh, monitoring, it's going to take me all kinds of time. No, it's not. Monitoring can take less than 5 minutes a week. And just looking at the current price of your ETF, looking at it relative to your exit point, and understanding what's going on with the broad trends in the market. It's simple, it's easy, it doesn't take a lot of time, but you've got to be consistent with it. And you've got to do it each and every week. And this is one of the reasons why I send out a special hotline via email every Friday night to my newsletter subscribers to Successful ETF Investing, so that they can get a quick snapshot, less than 3 minutes. They can read through what happened in the market last week. Are we close to any new buys or sells? Done. It's that simple. So if you need some help with your ETF investing endeavors, consider a subscription to Successful ETF Investor. And don't forget to visit etfu.com. I'm doing a new podcast tomorrow, and it's one of my favorite tasks of the week. This is Doug Fabian. Thanks so much for tuning in today. Be back at you next week.